Hey guys, John Polemy here, Actionable Intelligence. Today is Sunday, April 26th, 2020, and this is the weekly market update. Before I get started, I'd just like to thank everyone for helping me achieve 3,000 subscribers. We've blasted through the 3,000 subscriber mark now, and I want to do that shout out to everyone that's taken the time to listen, come over here and finds value. I've been doing this for a little bit over a year now, and when I first started, I really didn't know what I was doing. I probably, in many people's minds, still don't know what I'm doing. But like I said before, this is one man's opinion, and every man, if you will. I have my views. I'm not always correct in my views, but I'm never in doubt. And I put these videos out because I'm trying to find a alternative view towards the establishment media and the canards, lies, and shibboleths that they put out. Because if you are listening to the mainstream media that has an agenda, if you are doing what everybody else is doing, if you are swimming with the herd, you are not going to have very good results in life or in investing. That just seems to be my view. I've been a contrarian my whole life. I've been a critic. Some people say I'm cynical, but it's stood me well to ask questions, to challenge assumptions, and that's what we try to do here. So really want to, again, thank everyone. Appreciate the views, appreciate the comments. A lot of people don't agree with me. I'd say a good portion of the people don't agree, but like I said before, I don't agree with a lot of people, and having healthy dialogue is a way to get down and distill towards the truth. So, having said that, I want to talk about this documentary that came out last week on Earth Day. It was a film by Jeff Gibbs and co-produced by Michael Moore. Michael Moore, the famous left-wing liberal filmmaker, Bowling from Columbine, Fahrenheit 9/11, very provocative filmmaker, lightning rod, and makes a lot of comments that I don't agree with. I will give him some credit, though, because if you recall, before Trump's election, he was one of the few people on the left that said that he thought Trump would win and why Trump would win. He wasn't happy about it. He didn't support it, but he understood the reason why, and that many people still, I think, in the Democratic Party still don't understand why, in fact, Trump became president. But anyways, I wanted to talk about this film because I watched it and I thought it was very interesting. Now, people know my stance on energy. Energy permeates everything that we do. It's required for civilization. Large amounts of energy are required, and there seems to be a view among many people in the environmental movement and many people on the left that oil and gas, nuclear, our traditional fuels are evil by nature, notwithstanding the fact that they enable the civilization that the people that are criticizing them currently live in. So what I found interesting was this Jeff Gibbs made this film, and the presumption that he had was that, yes, in fact, green energy, renewable energy would be able to 100% replace fossil fuels and lead us to a clean, green future. As he investigated this, he found what many of us already knew, and that the green movement was co-opted, hijacked, and is in fact a conduit for the establishment, financiers, connected to garner more wealth and cream off more of the economy towards themselves with no real impact. And in fact, the point is made in the film, a net negative impact to the environment. So What I found particularly interesting, I suggest you watch it. It's entertaining. What I also find interesting is the response from the left, from people in the green movement. I mean, there are several points in the film where Al Gore and some of these people, Bill McKibben, some of these people that are supposed to be the champions of the green movement, and they're just caught flat out, lying, uh, stoking their own fire. I mean, Bill McKibben, who runs an organization, he was asked point blank in an interview who the funders of his organization, and he just pretended like he didn't know. I mean, really? You don't know who the major funders of your organization are? And then there was some more discussion around biomass, which I thought was interesting. I've worked in a biomass plant. It's, another form of energy. But the idea that it's carbon neutral and all these things, I mean, it just got dashed. And I guess what I find interesting is, and what I think we have to really focus on if we're clear thinking about this, is now, okay, well, Michael Moore and some subset of the left now believes that green energy won't be the solution. So towards the end of the film, a problem is put forward of what the real problem is and what the solution must be. And the problem isn't, well, that green energy won't be able to supplement or supplant fossil fuels or nuclear. The real problem is, and here it comes, here's the punchline, and it's starting to make sense if you look at the recent news. The real problem is there's too many people. So we're back to the Malthusian claptrap of overpopulation, diminishing resources, so we need to get rid of more people. I don't say it that blatantly, but the premise is that there's really just too many people. Now, they don't mean the well-educated liberal elite as being too many. The hoi polloi and the working classes and middle classes is who I'm sure that they are pointing the finger at. So we've heard this before. This has been proposed before. There's too many people. There's too many diminishing resources. Blah blah blah. Am I saying that constant population growth on a finite planet is a good thing? I'm not necessarily saying that, but I'm not advocating euthanasia either. So I think we need to be careful and watch where this possibly is going to go, because it's obvious now, even on the left, that this was a big blow. I mean, there's going to be enough cognitive dissonance on the left and among the environmental movement that people are just not going to accept this. There was a lot of editorials and comments made by people in the environmental movement and green movement that there was a lot of attacks against this film, but not a lot of refuting step by step the facts. That is an indication that the argument is probably a good argument if you have to attack the messenger and not the message. So I find it interesting that, again, we're back to people are the problem, and there's too many people, and that's what needs to be addressed. So I think it's worth watching. It's entertaining. If you already kind of knew these things, it'll just reinforce what you already knew. I think it is a wake-up call for some people. I say in the first week it had about 2.5 million views. It was put free on YouTube. I'm a little bit shocked it hasn't been taken down. Typically, even when I've made videos about renewables, YouTube will put a disclaimer under it or a link to a Wikipedia page to refute my comments, which were very similar to some of the comments that were made in this particular film. So I found that interesting. But that's the reality check for this week. And like I said, I'll put a link to that film, and you can take a look at it at your leisure. It's definitely worth your time. So let's take a look at the Fed balance sheet. We're in this, what I call mini depression. Some people call it a recession. We're in a depression defined as, to my mind, a period of time when most people's standard of living decreases. So what we've seen is a lot of government programs, paycheck replacement, business checks, whatever. But what I want to point out here is the 2008 great financial crisis, the response from the Fed, and just look at the response when we went from $1 trillion on the Fed's balance sheet to a little bit over $2 trillion, and that got us to all-time highs in the gold price. Then we had a period where the gold price peaked in 2011. We went sideways, and now we've had this blast off in the Fed's balance sheet. You can see the difference. Now, obviously, we went from 4 trillion on the Fed's balance sheet to now 6.5 trillion. You can track this. This is on the. I've pointed this out before. The St. Louis Fed has this FRED part of their website that has all the data, economic data. You can find just about anything you want to find. But these are the Fed's assets on their balance sheet. They're just buying everything to support the economy, to provide liquidity such that things don't collapse. And I think it's very interesting because this week we saw gold stocks as measured by the GDX, this is the ETF or the gold miners ETF, basically representing larger capitalization gold stocks. And you can see the sideways since several years. I didn't take it back too far, but you've seen sideways range bound market. And then this week you saw the initial sell-off when we had a liquidity crisis during the original sell-off back in February and March. And then we've basically retraced all that. And now we've broken out to this range. Things kind of look good technically long term here. In the short term, we're probably overbought, but your MACD, your moving averages are in alignment. From a technical perspective, money flow is good, and you have this propelling you, in my view. It's interesting that, again, I get a lot of, I guess we're back to more cognitive dissonance. I get actually, gold is now well over $1,700 an ounce. It made a couple of thrusts through there in the previous weeks and then dropped back below 1,700. It was able to penetrate 1,700 this week. It stayed above it. We're really close now to the all-time high of 1,900. And I've said before on many occasions that I believe that we will make all-time new highs in the gold price this year. I don't know how high it will go. I don't know what will happen, but I see what's happening here. And what I think, gold, I've said this before, I just want to reiterate this. You don't buy physical gold to get wealthy. You buy physical gold to preserve wealth. What you're seeing happening with the Federal Reserve, I don't think most people understand this still. They're just creating money out of thin air and buying real assets. Okay, that is inflation. That is the definition of inflation. Everywhere and always a monetary phenomenon. A lot of people think inflation is rising prices. That's a manifestation of the money creation. It's not in itself the definition of inflation. And what we're seeing is people do wise up to this. Human action does take place. And more people start thinking to themselves, wait a minute, I mean, how are they, the House and the president signed it, another 400 and whatever it was plus $1 billion paycheck protection plan. Where is that $400 billion coming from? Well, that $400 billion is being distributed and people are actually spending it on real goods, but you've just created fiat dollars out of nothing. And so people they understand intuitively, and some people actually technically and truthfully what that really means. And they look for a means to protect themselves. So that's why gold is a store of value. I mean, gold holds its value throughout time. You can basically buy the same basket of goods back in Roman times with an ounce of gold that you can buy now. Now, of course, you won't get the same things because obviously 2,000 years ago, they didn't have the same products, but I'm just talking about, amount of clothes, food, whatever could be purchased with the same amount of gold. And that's what physical gold does. It protects you against monetary and government malfeasance of paper money. What gold stocks do is they have leverage to the gold price. They are actually vehicles to speculate and create additional wealth. Why? Well, I've explained this before, but when you have your cost to mine gold is actually decreasing now. Why? Because a large input into the gold mining process, to run all those haul trucks in an open pit, the excavators, a lot of gold mines are in remote areas, so they have diesel generation. When your fuel cost is down, and energy inputs into the gold mining process are 30, 40, 50% of the cost of mining, and your energy costs are going down, your cost per ounce to mine has went down, yet the price of the metal goes up. So your leverage is increasing with an increasing gold price. And that, your costs don't necessarily go up as the cost of gold goes up. Now, they will over time, probably, who knows, it's inputs for different things will probably go up. But why you have leverage to the gold price with mining stocks is because your cost to mine doesn't go up as fast as the price of gold. So typically you see 3 to 4 times increases in gold stocks than you see in the price of gold. So we're seeing that. And we haven't really seen the earnings come out. We've seen some earnings come out, but you've seen exactly what we expect to see. The large cap gold miners, Newmont, Barrick, I mean, they're making all-time highs. And you're going to see, as more money comes into this market, you're going to see people move down the market cap scale into the intermediate gold miners, down into the juniors, and finally down to the exploration stocks. And as you go further down into the lower levels, if you will, of market cap into the smaller companies, you will see large jumps in market cap as money goes into them. I mean, Barrick or Newmont, is worth billions of dollars in market cap, but some of these junior mining stocks are only 50 or $100 million. The same volume of money goes in, you can triple or quadruple the price of a junior, where Newmont or Barrick would only go up 20% maybe, or something like that. So I still get a lot of people emailing me telling me gold's not going anywhere. Gold's went from $1,200 to we're up over $1,700, and like people are saying gold's not doing anything. I guess you can't drag a horse to water. I mean, all I can do, somebody said once, you can't teach people things. People have to be willing to learn. I mean, this is a very controversial topic, gold is. And some people hate gold. Some people have an aversion to it because they hate what it represents. They understand that you can't have a big government. You can't have a warfare state without a fiat monetary system. And some people benefit from that. That's why they hate gold. Or some people just flat out don't understand it. They think it's speculative, or they've got burned on it before, and now they have sour grapes towards it. It's just different things. I'm just showing you the facts. These are the facts. They're not in dispute. We're here to make money, not make a point. If you want to make a political point or have an opinion, you can. But like I said before, the whole purpose of why we're in the markets is to make money. And as speculators, we have to look at things objectively and not insert our emotion or our personal opinions. It's very hard to do, even for myself. So let's move on. Something's not right in the stock market, in my view. And I remember back just a couple months ago when this coronavirus thing was taken off all over the world, and we still hadn't had a big impact in the U.S., and the market was making higher highs. And I made a video a couple months ago that we were living in the biggest financial bubble in the history of the world. It was looking for a pin. It found it in the coronavirus. Then we had that historic sell-off. I think we were down 35% in 1 month. And then we had the bounce. But I don't understand something. How do we have basically near depression level unemployment? We have unemployment now of 26 million people, at least. We have destroyed businesses. We don't have any line of sight to what this economy is going to do over the next 6 months, year, 2 years. We don't know how, for example, how does the airline industry come back? How will people travel? Will people go to Disney World? How will restaurants reopen if they do? We don't have a line of sight to any of this, and yet the market is off. The S&P is off 16% off its all-time high and 29% off its low a month ago. You have Amazon has a $1.2 trillion market value and accounts for 40% of the entire value of the S&P 500 consumer discretionary sector. Now, they're doing quite a business because everybody's sitting home and having things delivered via Amazon to their house, which is good for Amazon. But at some point, purchasing power is going to collapse. If 26 million people aren't working, they're not shopping at Amazon. We're in an economic depression, and the stock market is supposed to be forward-looking. what is the stock market looking at? Because what I'm seeing is collapsing businesses. We haven't seen data come out from a lot of businesses about how bad their earnings have been damaged by this lockdown. So what is it looking at? Are we looking at a V-shaped recovery? I don't think so. I thought that that was a possibility if they open things up. I just don't see it now. I don't see people. Yeah, people want to get out of their houses. They want to. They're getting cabin fever. I get that, but I don't see people rushing and saying, "Okay, let's load up the kids and go to Disney World." I don't. I like to travel myself. I travel a lot. I travel internationally. I don't foresee myself doing that for a couple of years. I don't know if I want to be on a flight with 150 people who I don't know or what their medical condition is or what they're doing, on a tube. I think that's one of the reasons why we saw such a large outbreak in New York City. People ride the subway every day and they're just packed in there. And that virus just went through there like a brush fire. Vice where I'm at in South Texas, where everybody drives and it's everything's spread out. So we don't know, we don't have line of sight to what's going to happen, yet the market's only down 16% from its all-time high. I think we're in a bull trap. I think this thing, when these earnings come out and when the full spectrum and the full impact of what's really going on begins to dawn on people, that we're going to see a big sell-off. Now, there is a view, because of all the money printing that's going on, that we're in a Project Zimbabwe situation where that printed money has to go somewhere. And we've seen situations where in hyperinflation in Zimbabwe or Venezuela, even though the economies were collapsing and products weren't available, the markets there made all-time highs because people were looking for some store of value. So they were trying to buy any real assets they could get their hands on. And so the markets there, as the governments printed more and more money, as the hyperinflation took off, the stock markets made all-time nominal highs. They weren't real highs, but they were nominal highs. So is that what we're looking at? I don't know. I'm not prepared to have that discussion right now. What I'm looking at is various pockets where I do have line of sight, where I do have a view that I think is correct, that I can see what the earnings potential is, or what I can see where I have the edge. And what am I talking about? Gold, uranium, tankers. That's about all I'm looking at right now. And I'm starting to take a look at natural gas now because of the oil shutdown and the realization that the associated gas production is going to collapse with the oil production as it collapses. So I'm actually probably going to make a video about that. But just to blatantly go out and say, well, yep, I'm going to go out and buy the S&P 500 because we're coming back in a month or two, I am not of that view. I don't know the extent of the damage, but I think it's going to be significant, and I think it's being underpriced right now. I guess that's the takeaway. You have to look at this, helps visualize it, right, guys? I mean, new jobless claims in the U.S. are still surging. I mean, these are the last 5 weeks. Now we're down, but we still had 4.4 million in the latest report. We got 26 million Americans. I mean, this kind of brings in, this is a typical week when the economy was fine. And then look what happened when this coronavirus and the lockdown started. I mean, that should be gobsmacking people. That, when you have an economy like the United States economy that's 70% based on consumer spending and consumers are being thrown out of work, it doesn't take a big leap of logic or critical thinking to say that we're going to have less consumer spending. That's going to be translated into lower earnings. So I don't know how you get to higher stock market prices unless you print gobs of money. I mean, look at, this is the Eurozone PMI, Purchasing Managers Index, and GDP. You can see the 2008 Great Financial Crisis, the green line being the Purchasing Managers Index, the gray being GDP. Look at this. I mean, we're like double the amount of drop in PMI. I mean, the economies there are just locked up. What's the GDP repercussions of this? What are the repercussions to these economies that were already weak and the tenuous binds of the Eurozone itself? Are we going to see a resurgence of the southern economies, Spain, Italy, Greece, Portugal? I mean, with the humongous amount of debt. I mean, Spain was already talking about a kind of a UBI. How are they going to get the money for that? Who's going to buy the bonds? Is the Eurozone, is the Euro Bank, the central bank, European Central Bank, going to monetize all that debt? I don't think so. It's mostly controlled by Germans and people and the Dutch that perceive themselves as being fiscally responsible, which they're not either, but relative to the southern part of the continent, they are. So these are things that I think we don't know the full repercussions. I mean, the Eurozone, we could see this thing rip apart. I believe it will. This is going to be a catalyst. This is what I'm talking about, the social, economic, and political ramifications that we can't at the current time even envision. We can speculate, but you can sit around here for hours and think about different scenarios. You know, you're not going to get a V-shaped recovery. The Eurozone was already in trouble before this happened. So I point these things out because they need to be thought about, and I don't think there's a lot of discussion around it. And people just say, well, there's this assumption that the market seems to be having, or a view that we're just going to have this V-shaped recovery. I just don't see it. And what are the ramifications of that? I mean, what are the ramifications politically as elections come up and people are out of work, they're pissed off, their dreams and hopes are dashed, they have I mean, there was already high unemployment in France and Spain and these places because of the sclerotic regulations and the way they run those economies. So are they, when Spain or Italy, you get populist uprisings and people demand that the government do something and provide them with a basic subsistence income, where does the money come from? There's no tax base to get the money. So to issue bonds and then get the central bank, the European Central Bank, to monetize it just seems like a non-starter. So the way you could do it is we have to leave the Eurozone and we go back to the Spanish peseta, the Italian lira, Greek drachma. And they're able to devalue their currencies then and then eliminate a lot of the debt. That's a possible scenario that 6 months ago would sound laughable. 6 weeks ago would sound laughable. Now is a possibility that has to be considered. Let's talk about uranium. I mean, this thing looks like it's finally broken out. Spot uranium last week were bid ask there is $33.25 against $33.75 a pound. Do I think this is the real McCoy? I believe it is. I believe we've had resolution around a lot of the things that were holding back the uranium price. I mean, what was the catalyst during the last uranium bull market? It was the flooding that we had at Cigar Lake and the perceived supply interruption and the utilities then wanting to, you know, the game of musical chairs began, didn't want to be the person that didn't have the supply for your reactors. We've said this before. I mean, the primary concern of fuel buyers is not to get a good deal on uranium. They want to do that, but it's to ensure the supply of fuel to that very, very expensive asset. You know, if you spend $2, $3, $4 billion on a nuclear reactor, do you really care if you're paying $30 or $40 or $100 a pound for uranium? You don't. So I think a lot of the perception was, just to summarize from a lot of what I've read, I mean, you can spend a lot of time going down a rabbit hole with this too, with various people on the internet or on the Twitter sphere that have their opinion, but it comes back, I think, I just have to give a shout out to Marcelo Lopez again. You just got to keep it simple. Supply is down. That supply being down has now been exacerbated by mine closures for so-called COVID, which I think was just a cover so they could close these mines anyways to restrict supply. That's your catalyst. That's your Cigar Lake moment, okay, in my view. We needed the catalyst, something to kick this off. Now that the price has got a 3 handle on it, you know, we continue to move higher. Do we put a 4 handle on the spot price of uranium? That would be helpful. If we do, I mean, at some point now, fuel buyers are probably saying, okay, we can no longer just go into the spot market and buy uranium for $24 a pound. That doesn't exist. The price is starting to move higher. And I think it'll be interesting to listen to Cameco's conference call on, I think it's May 1st, about what they talk about the reopening of some of these mines, if they plan on reopening them, and maybe how they plan on supplying their clients and customers with the contracted uranium that they need to supply via the spot market, and what that's going to do and what their view is and perception of the markets are. That'd be very interesting. But I do think the bull market's kicked off. We've seen some big moves in the last month or so in uranium stocks. This is going to be a multi-year event in my view. It's not something, it's not over yet. So there'll be ups and downs, obviously. There is in every market. But I think this is a place where you can go. You could still, physical uranium, I believe, the last time I looked at uranium participation was still at a discount. And I believe they're doing a normal course bid. I think they're buying back stock because it's cheaper to use the cash they have to buy their own uranium assets at a discount to net asset value. So that's encouraging. Wanted to just bring your attention to, and I'll put a link to it, the strategy. This is, last week, the Nuclear Fuel Working Group of the Energy Department, the Trump administration, finally came out. This is another catalyst in my view. This takes another unknown away from the market, or answers an unknown. Strategy to restore American nuclear energy leadership, which I think is awesome. And just summarize some of the points. I'll put a link to it. You can read it. There's been a lot of summaries and analysis on the Twittersphere and Uranium Twit online. You can get into that. Like I said, that's a rabbit hole that you can get into as much as you want. Like I said, Marcelo Lopez has the best thing. Supply's down, demand's up. There's no substitute for this, so they have to buy it. So just real quick, the U.S. government's taking immediate and bold action to strengthen the uranium mining and conversion industries and restore the viability of the entire front end of the nuclear fuel cycle. They're going to be creating a uranium reserve here in the United States. Does that mean it's going to save the uranium industry? No, but it's more wind in the sails of this emerging bull market in uranium. It just takes away another negative and turns it from a negative to a positive. Utilizing American technological innovation and advanced nuclear R&D to consolidate technical advances and strengthen American leadership in the next generation of nuclear energy technologies. I mean, we're talking about small modular reactors. We just talked about Planet of the Humans and the further debunking of the fact that we're not going to get to 100% clean energy via renewables. So small modular reactors seem to me to be a path forward to that, and America needs to be on the forefront of that. We get 20% of our baseload power, or 20% of our power from nuclear energy, and we've just been ignoring it for decades. It's just ridiculous. We have a huge nuclear navy. We've been ignoring the fact that we have to buy our fuel from people that are possibly antagonistic to us. Ensuring that there will be a healthy and growing nuclear energy sector to which uranium miners, fuel cycle providers, and reactor vendors can sell their products and services. And then taking a whole government approach to supporting the U.S. nuclear energy industry and exporting civil nuclear technology in competition with state-owned enterprises. And you're talking about China and Russia there. So I think people like to dog out the Trump administration. It actually has some smart people there. Do I really like the fact that the government's getting involved with this? But it has to, right? You have 20% of your baseload power and you've just ignored it as nuclear, and you've ignored it for decades. I think if we can't allow China and Russia, because they use nuclear power and their ability to build reactors and their whole holistic nuclear programs as a foreign policy tool with other nations. We have to be involved in that. I like this. I got it off Twitter. It was this kid cracks me up. When I was a kid, I knew a lot of kids like that like to aggravate. I mean, let's just get a kick out of this. But anyways, oil tankers. Hey, if you are really watching the tanker rates, they're exploding higher. There's still non-belief in the market that this is a real bull market. This is still an opportunity. A lot of the stocks are still down for the year. Have made new highs. I think a lot of people, traders, and analysts think that this phenomenon is going to go away, but the glut of oil is not going away. And we just talked about earlier in this video the fact that we're not going to have the V-shaped recovery. It doesn't appear that. So can't just shut these wells off. Now I'm trying to reach out to some folks that are in the oil industry that really know like the mechanics and how it really works about shutting wells down, and how that really happens and how fast that can happen and what are the repercussions of that. Uh, so I will be working on that. But in the interim, we're going to build a glut, and it has to go somewhere. And I think the view is towards tankers is that, well, this thing's going to play out in a couple weeks, and that'll be the end of storing crude on tankers. And I just see this as a once every 10 or 15 year tanker bull market that does happen. And I don't have the time right now to get into all the other fundamentals, but they still apply. The fleet is old. There's not a lot of new ships being built. The IMO 2020 and 2030 will come in back into play, even when we do go back to work. So lots of things happening, and now with all this dislocation because of the futures markets and the filling of storage on land storage, there's going to be different routes taken and delivery points and different grades of oil when you do turn things back on. It's just a lot more complicated, and all this complication causes disruption in real typical tanker, delivery points, the way things were done, distribution of petroleum products. It's all in chaos, and that chaos equals cash in this tanker market. So it's not over yet. I think it's going to surprise people, and when it does, when the realization sets in, it's just like when the market collapsed in February. I mean, we made all-time highs when this coronavirus was grabbing hold around the world, and all of a sudden the market realized, 1 week everything was fine, we're at all-time highs, and boom, the next week we're in the middle of a crash. So the reverse can happen once the mindset and perception changes towards an asset class. So my view on that. So that's it for this week, guys. Like I said before, appreciate the new viewers, appreciate the old viewers. Some of you guys have been with me since the beginning. I definitely appreciate it. This channel continues to grow. I want to continue growing it and doing this work for you guys. So thanks again, and have a good week. We'll talk to you next week. Thank you.